Hello everybody, I am Vidhav, a final year student of Shahid Bhagat Singh College, and today I will be discussing the topic different types of return under GST. So, first up, the first question which comes to my mind is what does the term return exactly mean? A return is basically a document which is required to be filed by a taxpayer using which the tax authorities calculate his tax liability. So, first up, we have GSTR1, which is a statement for outward supplies. Now the question which comes to our mind is what does the term outward supply exactly mean? It has been defined under section 2 clause 83. However, in simple terms, outward supply basically refers to sale of goods or services. Now, who all are required to file GSTR1? As per section 37 subsection 1 and rule 59 sub rule 1, it has to be filed by every registered person, including a casually registered person. However, the following persons have been given an exemption in this respect: A. An input service distributor, B. Non-resident taxable person, C. A supplier of online information and database access or retrieval services, and D. Persons who pay tax under the provisions of following sections. Section 10, which basically deals with competition dealers. Section 51, which deals with persons who are required to deduct tax at source. And Section 52, which deals with persons who are required to collect tax at source. Next up, what about revision of GSTR1? If a taxpayer makes a mistake in filing his GSTR1, can he amend or rectify the same? What are the provisions in this respect? The same has been provided for by provision to section 37 subsection 3. It states that revision of GSTR1 for the time being is unfortunately not allowed. However, the same may be rectified and the maximum time limit for rectification is as follows. It shall be the earlier of the following two dates: actual date of filing of return under section 39 for September of next financial year, or actual date of filing of relevant annual return, whichever is earlier. Moving forward, what about the due date for GSTR1? Recently, through notification number 83/2020, the government has provided for a staggered due date for GSTR1. In case your aggregate annual turnover exceeds Rs 1.5 crore, then GSTR1 needs to be filed on or before 10th day of the succeeding tax month. It may be noted that for the time being, the date has been extended to 11th day of the next month via notification number 83/2020. So to illustrate by an example, if you have to file your return for the month of April 2020, you need to do the same on or before 10th of May/11th of May 2020. In case your aggregate annual turnover is up to 1.5 crores, that is either less than 1.5 crore or equal to 1.5 crore, you need to file the same on or before 13th day of the month succeeding the end of the quarter. Yes, you heard it right. These taxpayers have been provided an option to file their GSTR1 on a quarterly basis. Again, this has been done via notification number 83/2020. So to illustrate this by an example, for filing GSTR1 for the quarter April to June 2020, the same needs to be done on or before 13th of July 2020. Coming to invoice details required to be furnished in GSTR1, we all know outward taxable supplies can be basically classified into B2B supplies and B2C supplies. B2B supplies, as the name suggests, are the supplies made to other business persons who are registered under the GST Act and who may claim input tax credit. In this case, obviously the government requires more details. Hence, it doesn't matter if the supply is interstate or intrastate, invoice price details needs to be uploaded of all the supplies made by the person. In case of B2C supplies, as the name suggests, these supplies are made to end consumers or customers who are final consumers of the product and who do not intend to claim input tax credit. Hence, the terms are a little liberal in this respect. In case of interstate supplies, only if the invoices exceed 2.5 lakh, invoice-wise details needs to be furnished. In all other cases, state-wise consolidated details are enough. And even in intrastate supplies, only consolidated details of supplies are enough. Before moving on, it may be noted that even if no business activity takes place during a given tax period, the registered person still has to file GSTR1. In this case, a nil GSTR1 may be filed. The nil GSTR1 can be filed through registered mobile number of the registered person and the same may be verified through OTP facility. Moving on, next up we have GSTR2, which is a statement for inward supplies. Now again, what does the term inward supply exactly mean? It has been defined under section 2 clause 67. However, it may be enough for us to understand that the term inward supply basically refers to purchase of goods and services. Now who all are required to file GSTR2? The same has been answered by section 38 and rule 60, and the persons who are required to file GSTR2, including the persons who are exempted, are exactly the same as that for GSTR1. Coming up to revision of GSTR2, what if there is a mistake in GSTR2? Can the same be amended or rectified? Again, the provisions in respect of revision of GSTR 2 are exactly the same as those for GSTR 1. Sadly, revision of GSTR 2 is also not allowed. However, the same may be rectified, and the time limits for the same are similar to those for GSTR 1. Now coming to due date for GSTR 2. GSTR 2 needs to be filed after the 10th of the succeeding month, but on or before 15th of that month. To illustrate by an example, if you have to file your GSTR 2 for the month of April 2021, then the same needs to be filed after 10th of May 2021, but on or before 15th of May 2021. It may be noted that for the time being, filing of GSTR 2 has been currently suspended. Next up, we have GSTR 3B, which is the return for inward and outward supplies. Now, who all are required to file GSTR 3B? Again, as per section 39 and rule 61, GSTR 3B needs to be filed by each and every registered person, including a casualty registered person. However, the following classes of persons have been given an exemption in this respect: an input service distributor, a non-resident taxable person, a supplier of online information and database access or retrieval services, and persons who are paying taxes under the provisions of following sections. Section 10, which basically deals with compensation dealer. Section 51, which deals with persons who are required to deduct tax at source, and Section 52, which deals with persons who are required to collect tax at source. Now, what about revision of GSTR 3B? Again, the provisions are similar to those as per GSTR 1 and GSTR 2. However, there is a small change. Again, revision of GSTR B is not allowed. However, the same may be rectified, and the maximum time limit for rectification is as follows. It shall be the earlier of the following two dates: the due date of filing of return under section 39 for September of next financial year, or actual date of filing of relevant annual return. It may be noted that the only change between GSTR 1, 2 and GSTR 3 is that instead of the term actual date of filing of return under section 39, the term due date of filing of return under section 39 for September of next financial year has been used in GSTR 3B. It may be noted that due date of filing of return under section 39 for September is October 20, and the return under section 39 is GSTR 3B only for the time being. Now coming to new due dates for GSTR 3B filing. The due dates have been provided for in a staggered manner so as to reduce the burden on taxpayers as well as the burden on the portal. In case your annual turnover in the previous financial year exceeds 5 crore, then the due date is 20th of every month as specified in the Act. However, if your turnover is less than or equal to 5 crores, then the due date is either 22nd of every month or 24th of every month, depending upon the place where you have been registered under GST. It may be noted that initially section 39 provided for filing of GSTR 3 as the return for inward and outward supplies. However, for the time being, GSTR 3 has been suspended. Now, to explain the chronology of events, a supplier initially files GSTR 1, uploading details of all his invoices and sales of goods and services made by him. These details are then forwarded to the recipients, who views the invoices in GSTR 2. Initially, these invoices are auto-populated in GSTR 2A, using which GSTR 2 is made for the recipient. The recipient views the invoices, edits them, and sends them back in case he finds any discrepancy. These edited invoices are then made available to the supplier in GSTR 1A, where he may either accept or reject these invoices. In case he accepts these invoices, corresponding changes are made in GSTR 1 as well. Next up, we have return for composition dealers. Now, who are these composition dealers? As per section 10, composition dealers are the people who do not collect GST on their outward supplies, nor are they eligible to claim ITC on their inward supplies. They pay a specific amount of GST on their outward supplies as tax to the government. Now, these people need to file two types of returns. One is Form GST CMP 08 and the other is GSTR 4. Form GST CMP 08 is a quarterly statement for payment of self-assessed tax, which needs to be filed on or before 18th of the month succeeding the quarter. To illustrate by an example, for the quarter April to June 2020, GST CMP 08 needs to be filed on or before 18th of July 2020. GSTR 4 needs to be filed on an annual basis, and it needs to be filed on or before 30th of April succeeding the end of the year again. To illustrate by an example, for financial year 1920, GSTR 4 needs to be filed on or before 30th of April 2020. It may be noted that just like GSTR 1, filing of GST CMP 08 is mandatory even if no business activity takes place in a given tax period. In this case, nil GST CMP 08 can be filed through SMS and is verified through OTP facility, again just like GSTR 1. The details of inward supplies of a composition dealer will be auto-populated in GSTR 4A. The corresponding form for regular dealers is GSTR 2A as mentioned earlier. Now we come to miscellaneous returns. First up, we have the first return, which has to be filed under section 40 by the registered person. This return basically discloses the details of output supplies made by the registered person between the date on which he becomes liable for registration, that is the date on which he crosses the threshold limit, and the date on which registration is actually granted. And now we have some other miscellaneous returns, such as GSTR 7, which needs to be filed by tax deductor under section 51. It is also a monthly return and it needs to be filed on or before 10th of the next month. GSTR 6, which needs to be filed by an ISD. Again, it is also a monthly return and it needs to be filed on or before 13th of the next month. GSTR 5, which needs to be filed by an NRTP, and the date for which is as follows. It shall be the earlier of the following two dates: 20th of the next month or within 7 days from the end of registration, whichever is earlier. GSTR 10, which needs to be filed by persons covered under section 30 and 1. These are basically the persons who need to file GSTR 3B. The return under section 45, that is GSTR 10, is actually the final return. It needs to be filed within the following timelines: within 3 months from the date of cancellation of registration or date of order of cancellation, whichever is later. The later of these two dates shall be the date by which GSTR 10 needs to be filed. Now, Rule 62 prescribes that GSTR 11 needs to be filed by persons who have been issued UIN. First of all, what does UIN mean? UIN basically refers to Unique Identification Number. It has been issued to those authorities who are not eligible to pay taxes under the Indian territory, and hence they can claim refund of GST paid by them on their inward supplies. It needs to be filed in Form GSTR 11 again on a monthly basis, and the date for same is 28th of the next month. Now coming to annual return. Annual return needs to be filed in Form GSTR 9 for regular dealers and Form GSTR 9A for composition dealers. As per section 44 and Rule 80, an annual return is required to be furnished by every registered person. However, there are a few exceptions. The exceptions are as follows: an input service distributor, a casual taxable person, a non-resident taxable person, a supplier of online information and database access or retrieval services, and persons who pay taxes under the provisions of section 51, which basically deals with persons who are required to deduct tax at source, and section 52, which basically deals with persons who are required to collect tax at source. Again, the list of exemptions is pretty similar to those for GSTR 1, 2 and 3B, the only difference being casual taxable person and composition dealers. It may be noted that composition dealers who are specified under section 10 of the Act are required to file annual return via GSTR 9A. Now coming to the due dates, as per section 44, due date for annual return is 31st of December of the next financial year. Illustrated by an example, for financial year 1920, the due date of annual return would be 31st December 2020. However, due to the technical glitches faced by the taxpayers and also due to reduce the compliance burden on the taxpayers, the dates for annual returns have been regularly extended. These are as follows. For FY 17-18, the extended due date is 31st January 2020. For FY 18-19, it is 31st December 2020. And for FY 19-20, it has recently been extended to 31st March 2021, that too on 28th of Feb 2021. It may be noted that filing of annual return has been made optional for FY 17-18 and 18-19 for taxpayers whose aggregate turnover is less than 2 crores to reduce the compliance burden on them. Now coming to GSTR 9C, which is basically the reconciliation statement. As per section 35 subsection 5 and Rule 80, every registered person must get his accounts audited by a CMA if his annual aggregate turnover during a FY exceeds 2 crores. He is required to furnish a copy of audited annual accounts and the reconciliation statement duly certified by CACMA along with his annual return. However, via notification number 79/2020, audit limit has been increased from 2 crores to 5 crores to reduce the compliance burden for small taxpayers for the financial year 18-19 and 19-20. Now, the first thing which comes to our mind when we hear the term reconciliation statement is, what does the reconciliation statement exactly mean? As per section 44 subsection 2, a reconciliation statement reconciles the value of supplies declared in the annual return and the supplies declared in the audited annual financial statements. It may be noted that Finance Bill 2021 has proposed a few changes in the system. and it has proposed to do away with section 35 subsection 5, that is to do away with the requirement of GST audit and to provide for filing a self-certified reconciliation statement under section 44, that is the need to get the repo statement certified by CMA has been done away with. These propositions by Finance Bill 2021 have received mixed responses from the CA community and GST practitioners. They feel that the need to do away with GST audit and the need to file a self-certified reconciliation statement may increase the cases of tax theft and may reduce the overall level of compliance with the Act. So, to conclude, as can be seen, the system of returns under GST is quite complicated. As most of the returns are required to be filed on a monthly basis, the cost of compliance turns out to be pretty heavy, especially for small taxpayers. Also, it may be noted that late fees, penalties, interests prescribed under the GST Act are quite big. In fact, at times these get so big that they may even lead to closure of the business. Add to this the fact that when the taxpayer tries to file his return on or near the due date, the portal often starts malfunctioning. This may be explained by the fact that the current capacity of the portal is to handle 1.5 lakh taxpayers at a given point in time. However, the actual number of taxpayers registered under GST is currently around 1.4 crores, which is 70 times more. In the near future, it is hoped that the government considers to revise the system of returns under GST and also tries to upgrade the technical infrastructure of the portal. Thank you and have a nice day.